Hey everybody, Joe Malone here. It is a Tuesday and the market is correcting. So this is a time to be careful. It looks like we are in a market under correction. So I want to be very clear about that. It is time to possibly be much more cautious than we have been before. We are in a market an uptrend under pressure, and so basically in these times, basically we're moving from a market in an uptrend to correction market. We don't want to be entering any new positions right now. We want to be very careful because it looks as if the condition of the market has changed. So the rules on this are basically no new buys. So don't be buying anything else. If you do have profits coming into earnings, it's a good time to sell coming into earnings and obviously into the election. So good time to start taking profits right now and waiting for another uptrend. We are in an uptrend under pressure, and we definitely have changed the direction in the market. So this is very important that you realize that it's not going to be a little bit more difficult as we go forward now, because we have moved into this market trend under pressure. I want to show you the Nasdaq. It's at 11,400. It is still moving up. I mean, when this slide was taken, but the S&P 500, the Dow Jones, and the Qs are all off. So this is a time to possibly start reducing our positions. If we have winners right now, it's a good time to possibly consider taking some profits right now. We will see how it trades tomorrow. I suspect that I will be taking some of my positions off because it is time to basically conquer down a little bit until we get a firm direction. Either we're going to see the market go into retreat or we're going to see it go higher. But right now, the uptrend is under pressure. So we want to be very careful about committing any new money. We basically don't want to commit anything right now because that is what the market is saying. Here is the Spider. Of course, this is the world's largest ETF, and this is a very important measure. Many people have their entire retirement in here, so this is something that you want to be very, very careful about. It is at 338.36. It is down just slightly. The key level on this is about 320, but it has pulled below the 50-day moving average. The significance of this is that when this happens, the market may be moving to the low side. So we may be getting back to where we are going to retreat a little bit more, possibly test the lows. Now, the last time the lows were made on the Spider was back on March 23rd when the Spider hit 211. We're quite a ways away from that. We're at 338.63. And of course, we're prior to an election. So there is a lot of uncertainty right now in the market, obviously. And this is something to be very cautious. So you need to be cautious in committing any of your new positions. New positions are really the most concerning thing. It's not a time to be buying. It's possibly a time to be taking profits right now. So that said, I want to show you the Invesco QQQ Trust, and this is basically the NASDAQ 100. This is where many of the very, very best of the stocks are and continue to be. So this is also at the 50-day. We haven't seen a full change in direction, but we are definitely trending down, as you can see this. So we have a market trend under pressure. We want to start to possibly take our winners out, and we want to move probably into cash. Cash is probably the best edge here. I know that sounds strange, but not gold, but cash. I did put on a small Bitcoin. I have been putting on a small Bitcoin position. It's a very small position. I'll show you that later. And that's available through an ETF called the Gbtc, the Grayscale Bitcoin Trust. And that's a way you can own Bitcoin. They have about 4% of the Bitcoin in the world. So that is a significant one too. And I probably will be starting to feature that index on here in the future as it becomes more readily fungible. As you know, PayPal has made an agreement where Bitcoin can be bought and sold. So that's an interesting alternative to cash. But right now, with the market trend under pressure, we want to be starting to make our way to the door and possibly taking our profits, and we don't want to be committing any new cash positions. Just wanted to show you very quickly sort of what's happening in terms of the polls. This is quite interesting. It looks as if the polls are getting a little bit tighter. This is the most current. This is the only poll that, by the way, I recommend. It's the IBD tip poll, and the reason is because it accurately has called the last 5 elections, and almost nobody else has, Rasmussen included. So right now, the Democratic challenger is leading by 4.4%, but it looks as if Trump is moving up. So we have to be kind of be careful of that. Any shift is going to cause issues. This is part of the reason why the market is trading a little bit sideways right now. So we have to be careful about that as well. Just wanted to kind of show you that as well. Just want to show you my current holdings. And this is the current holdings in both in the small portfolio and in the other larger portfolios that I trade. I'm in Taiwan Semi. It is down a little bit. I'm in Tesla. It is moving up. Now, interesting thing about Tesla is that it is showing a support at about 419. I do believe it's going to go higher into the end of the year, but it's just up barely. But the rest of the market essentially is not. So this is kind of a bellwether. 422 on Tesla. I'm also up on Cloudflare. Of course, that was a very strong stock, and it's continuing to maintain strength. But I probably will be selling this into the earnings just because I don't trust it, and I do think that the market is weakening. I also been Qualcomm. That's down just slightly. Viva Systems up today very nicely. Viva seems to be bucking the trend. This one seems to be doing, and of course, the Greystone Bitcoin Trust as well. So those are what I have currently in the market, and just FYI. There is one breakout stock today. Interestingly, I wanted to show you. It's Match.com, and this is interesting because there's only 3 breakout stocks today. This one happens to be doing quite well at 124.84, and it's up $5.58. I can't quite figure out why that is. Got a relative strength of 91, but I wouldn't recommend buying this right now just because of the condition of the overall market. But this is a breakup. This is a breakout stock from a consolidation base at 124. So I kind of wanted to show you that. Match.com symbol on that one is MTCH. Okay, so let's get to some of the questions. Thank you for holding on here, and hopefully we can get that. There we go. Okay, so get to some of the questions here. Let me pull that up. All right, so thank you very much for holding on the chat. Let's see. The first question is, hello, Jim. I moved out of Tesla too. Now your advice on moving into cash. Well, I do think, we've got to be careful and move, and start to make the move into cash, just because we don't know kind of what the situation is going to be with the, just with the market. So I'm going to be careful on that. Let's take a look at the Gbtc. This is a sort of an alternative investment. It invests in Bitcoin. Not totally recommending it, but it is pulling up today and it's doing quite well. So this is one that I've been recommending, and I do think that if you're going to shift some of your money, I don't recommend any new buys, but if you're going to be shifting some of your money, this might be a safe haven, at least in the short term. It's called the Greystone Bitcoin Trust. It's at $15.60. When I started buying this at about $14, so it's up $1.22, quite nicely. Relative strength of 89. This is just one. This might be a safe haven that you might want to go into. It does have a lot of support, so kind of there. So let's see if I can get a question from TikTok real quick. Thank you very, very much for taking a look at me on TikTok. So sell net. Well, I think it may be time. Let's look at net just to see if it is time to sell that bad boy. You know what? I do think it is consolidating. So I think it's time to possibly take some chips off the table. I'm not saying you have to sell all of it, But I would, if you've got profit on this one, and of course this is part of the trade alert. If you've got profit on this one, we're only, we're only basically 9 days in front of earnings. Why not take a little of your profits off the table and bank that and see where the market is going to go after the election? So that's all I'm saying here with Cloudflare. It might be a good time to be in a little bit more cash heavy, and it's been a good stock. Now after we come through this, then it probably will be time to rebuy it. But right now, it's time. It's a good time to be booking some profits if you have them out there. So, Christian, thank you very much. Is NEO breaking out, or is it just a head fake? Thanks. This is NEO, of course, everybody knows, is the Chinese. People call it the Chinese Tesla, and it certainly has been showing some good stuff. It's definitely gapped up today. So let's look at that chart really quick and see what we've got happening. It's got a 99 relative strength. This is excellent, and it is pulled above the 10-day moving line. So I don't think this is necessarily a head fake, to be honest. I just think it's settling out to the 10-day moving average. So let's see if kind of where we think it may go. And of course, it's all speculation, but I do think that this is going to form a new potential here. I do think it is headed north. I just don't think you want to be putting any more resources in here. If you're already in here, it's one thing. But if you're moving in with new resources, it's not a good time to move in with new resources. There'll be time for that after the election. But right now, the market direction has changed, so we want to be very careful. It's got an excellent buying chart, though. It's 8 out of 9, so that's very good. And actually, it does have some very good fund support. I mean, look at how many funds are picking up. So we definitely can't count out NEO. I think NEO has some real legs. Now, would I go in this with new money? Not at this moment. And it has nothing to do with NEO. It just has to do with the overall market. I don't think we want to go in with new money right now into NEO just because of the market change. We'll be through this hopefully very soon, and it won't be more of an issue. But if you do have some profits in NEO, consider selling half of your position and going and putting that into cash. I definitely am going to be moving more towards cash probably during this next week. That's the way it looks like to me. Thoughts on SPWR? Let's look at SPWR real quick, and let's see if we have anything there. SPWR, and I will see. This is SunPower, and it's a solar company that produces high performance electric power technologies, and it has other proprietary processes. This one seems to be pulling back, unfortunately, to that 21-day exponential. Now, if it doesn't hold the 21-day, then I don't think it's the place to be. I think that it's a good time to sell it, and the reason I do is because it's 1 day in front of earnings. It's pulling back. It might go higher after earnings, but Dinesh, I think that in this case, I think it's better to be safe rather than sorry. And I would be selling. I would be a seller of this one. I think you could still. I think there's a few more minutes left to trade today. I just don't think you want to hold this one into earnings. I don't think it's. I don't think that's a wise way to go with this one. So not that you can't re-enter it, but I just don't think. I don't think holding it right now is not necessarily a very good idea, because I do think that earnings could change the direction of this very, very easily for SunPower. Is gold still a hedge against the market? Well, very, very good question. I am not a gold bug, as you well know. I believe in the gold miners, though, like KL and like Franklin, Nevada, and gold miners like that, and also in Barrick and those. I don't think it is, but let's take a look just at the gold stocks. Let's take a look at the first of my favorite of the gold stocks, and that's the Canadian company Kirkland Lake Gold. And it's been pulling. It doesn't have a good chart, so this is why I think you got to be very careful with gold right now. Let's take a look at the chart. Unfortunately, in the last few days, it just hasn't been performing. Now it's pulled up a little bit, but it is basically off the 50-day. It's off the 21-day exponential. It's still above the 200-day exponential, but we have a lot of selling activity here. I don't think gold is where you want to be right now. I think where you want to be is cash or cash equivalent. Now, what do I mean by cash equivalent? Of course, there's cash. That's always a good place to be. But also, you might want to consider the Greystone Bitcoin Trust, because that has been doing quite well. So I think that, basically now it isn't necessarily a hedge against the market. Everybody says gold is a hedge, but it is not necessarily a hedge in a deflationary market. And we don't have an inflationary market. We have a deflationary market. I want to be very clear on that. Here's why I know it's deflation. Now, it seems like things are getting more expensive, but assets are going down in value. Because, for instance, the retail economy is shut down, things like shopping centers, things like commercial properties are actually reducing in value. This is deflation. In deflationary times, we want to have cash, because a lot of people are not working and a lot of people are having cash issues. This is why the stimulus is so important, because it will give cash, put cash into people's hands. 70% of the United States economy is in the retail sector. So we've got to be very careful. It's true. Everybody out there is talking about inflation. Don't talk about inflation, talk about deflation. We want to have cash right now, because it does appear we may be getting a little bit of a deflationary shock going into the election if we don't get the stimulus. So that is that's the long and short of it. I don't think you're going to be happy in gold. Gold is an inflation hedge and not a deflation hedge. Thoughts on Draftkings? I like Draftkings a lot because I like the whole sports gambling concept that they have. It's definitely a big deal. I mean, it is. The chart doesn't look that great. I wouldn't buy it right at this level, but I think it's definitely a watch list. You see, this is not a chart to buy, unfortunately, because as you can see, the trend is basically the wrong way. We're going down there, yeah. So you see, it's moving from upper left to lower right. We don't want to see that, but the relative strength is still excellent at 98. Let's look at the checklist. It's still very good, 5 out of 9. It's not good enough for me to buy, though. I want to see 6 out of 9 in order to buy it, but it's still good. This is a watch list stock. We've got earnings in 17 days. Don't want to be in it right now. If you have profits in Draftkings, we are trending lower. I think it's a good time to possibly sell and take some of your profits if you've got profits in there. But it's still a good stock. I'm not saying it's not going to come back, but I don't think it's good to enter with new money right now. Just is not. Jim, I have Tesla at 407 and sell. No, I don't think so. I don't think you want to sell Tesla right now. I know this is counter. I think you've bought it very, very nicely. I think you're in for some very good potential, a potential gain. Let's take a look at the chart of Tesla. As you know, I am fairly heavily invested in Tesla, and I probably will be riding it out. We had an excellent quarter at 102. Now, is it going to be choppy? You betcha it's going to, but it's up $4 today. So I don't think we want to be selling Tesla. Tesla is sort of a counter-cyclical issue. It typically does, as the rest of the market is doing poorly, a lot of the market moves into Tesla because everybody does know, I believe, that it is sort of the future. So I don't recommend selling Tesla at this point. I think that once we reach 466, then I think that you might reconsider selling maybe a call or something like that. But right now, I don't think it's time to sell Tesla. I am a little bit of a Tesla bull at this point, and I think you've made some very good buys, and I think you should be very proud of yourself because that is a very good place to be in Tesla. I just want to show you. Let's take a look at the 30-minute chart on Tesla to see kind of how it is trading. Well, it's trying to trade up, and that is no surprise. That is no surprise that it is. There was a huge buy just a few minutes ago, as you can see by this spike. So it looks as if money is starting to move into Tesla now. We're through earnings. I wouldn't necessarily put any new money into Tesla until we get to the buy point at 466. But if you're in Tesla, it's not a good time to cut and run. I think you want to be all in right now for Tesla, my opinion. So great. So that's great. And congratulations on those buy points. Those are excellent. Those are going to make you some money. I'm almost positive. What about ARK Invest, ARKW? Interesting company. I think this is ARK Invest. This is Kathy Wood's fund, I believe, and she is a phenomenal PM. phenomenal. She's just really good at it. And this is Archinvex Next Generation, looking nice. Is there a cup in hand? Is there where to buy this? Well, ETFs are a little bit strange. You don't quite buy an ETF the same way that you buy a stock. With an ETF, what you're looking to do now, with a stock, you don't want to buy on dips. You want to buy on strength. Now, but an ETF is different because it holds a basket. It's okay to buy on weakness with an ETF. And this is a very, very good one. I mean, ARK Invest is a very good one. And it looks like it is setting up here for a run. So let's see if we have any buy point on the daily chart. Let's look at that daily. Yeah, it's pulled back to the 21-day exponential. It's the only real place to buy this. You probably could have bought this yesterday successfully on the pullback to the 21-day. But I don't think you really have to worry about this one. The trend is up on this. And it's looking very strong. It's got a checklist, 7 out of 9. That's definitely meets my criteria. The number of funds in it are good. Now, remember, this is an ETF, so obviously there's not going to be as many funds in this as there would be in an actual stock. But that's something to consider here. It's got a relative strength of 95. I really, really like this. Overall, I think that this is an incredibly well-managed fund, and I think that if you're looking for kind of a safe harbor, this is not a bad way. This is not a bad one to look at. ARK Invest. So ARK Invest Next Generation. So thank you for that. That's a great one. And there really isn't a buy point, though. Ricardo, unfortunately, there really isn't a buy point on that. But the thing is, because it's an ETF, you can safely buy it at a lower. It basically it's not as critical as in an individual stock. Individual stocks you want to buy basically in two ways. You either want to buy them on a basing pattern, such as a cup with handle, 3-week tight consolidation, or you want to buy them on a pullback to usually the 21-day exponential or possibly the 10-day moving average. So that's where you want to buy those if you can't buy them on a actual chart pattern. Okay, so cool. Hi, Jim. Are we taking? Is it worth taking any new positions? No, at this point, I don't think you want to. I don't think you want to take any new positions. I'm going to show you just for fun. I'm going to show you what I have in my small portfolio now. I have been, I'm still not all in cash. I'd like to move closer to that than I am, but right now, because of the change in the market direction, I am moving into I'm moving into more of a cash-centric position. I only have one full position in cash. I suspect that I will be probably jettisoning Viva Systems. I haven't lost a lot of money on it. Really only $7, but it just isn't performing the way I'd like it to. Probably going to move that into cash. Now I did pick up a half a position in Cloudflare, and that seems to be working well. But I more than likely will be selling both of these positions the day before earnings. So expect those to go away. I may, the Bitcoin Trust has done phenomenally well considering the amount that I invested in. I had a very small position in this, just this little sliver here, but yet it's performing quite well. It's almost up $1, and it's not very expensive. That's GBTC. So I'm going to be moving more into cash than I've been, just because of that change in the market. Thoughts on Beam? Let's take a look at Beam really quick. See if I can find a. In this market in general, it's a little bit more difficult because we just don't have we just don't have the market confirmation that we had just a week ago. It seems to be moving quite well. I mean, Beam Therapeutics. It seems like gene editing. So I can't say anything about it. Would I take a new position in this one? Probably not. But it does have an excellent checklist, 6 out of 9. That's good. And we do see increasing fund ownership. That's excellent. And it's looking like it looked like the funds are in there very strong at 29%. Would I be going into this? Is there a buy point on it? Well, the last buy point on Beam, basically when it broke out, was on the last consolidation was 31. Now it's moved 16% above its breakout, and so it is a little bit precarious to buy in this position. I want to see a little bit more I want to see pullback possibly to the I want to see it possibly pull back to the 10-day moving average before I would buy it. I think it's a little too high right now to buy it at 38.47. If it did pull back to about 33, then I would consider buying this, definitely. But I would not consider buying it at this level. I want to see a pullback to that 10-day moving average. Remember, that's one of the two best places to buy it. It's either you buy on you either buy it off of a base pattern, which this was consolidation, or secondarily, the second best place to buy it typically is on the 10-week moving average, and that's that little pink line that I showed you. Let's take a look at some people on Tesla on TikTok. Thanks for holding on. Oops, I was trying to make it work. Okay, well, heck, let's. I got emojis and everything, but not what I want to see. This is a question on gold. Why is cash instead of gold? Good question. Because this market will turn, and when the market turns, cash is going to be very easy to push into things that will continue. Because I don't think that the market is. I think the market is finding its direction, and I do think it's finding its direction, and I don't think it's going to stay. Now, if it goes into a confirmed downtrend, that's another story. But gold, I know that everyone has told you throughout your life, oh, gold is the thing to have. It's the only safe money, and there's people on the air advertising it all the time. It is not. Gold is just something that people buy with cash. Cash in the deflationary market, which we're in now, is king. So remember, cash is king because it allows you, after the markets have corrected, to buy the things that are basically at lower price. So that's the reason why that's why cash, not gold. I know it sounds very strange to you. Most people will tell you the opposite of that. Okay, SPAC. Okay, let's gold, GLD. What do you think about AMD? I love AMD. AMD has been like Nvidia, has been one of the best stocks this whole year. Now, actually, Nvidia is probably the number one stock currently. We've had a pullback, and I want to show you this. This is important to take a look and see how these things pull back. It's pulled back below. We've got a lot of selling action going on here. This is a very, very typical chart in that, AMD crushed it when it came to earnings, but it fell. You go, well, why did that happen? Why did something that crushed it fall? Well, this is the way the stock market works. It's typically buy on rumor, sell on news. So all of the potential up was included in that price, and after they purported really well, people said, well, it's time to sell. I'm time to take my profit. So that's exactly what happened here. Now, is this necessarily a bad stock to rebuy? No, because I do think this is going to turn around after the sellers are shaken out. Right now, we have 8 out of 9 checklists. So AMD remains very strong, and it is. And if we look at the weekly chart, we can see this. It is in a very strong uptrend. But right now, it's not the place to buy it. You want to make it pull back to this red line, and that is the 50-day moving average. So that's where you could possibly buy this. Very strong relative strength at 94. Just an overall good stock, but it's interesting. You would think that it would go up after really great earnings. They had really great earnings and it went down, but that's the typical pattern. It's very interesting. All right, so what do you recommend going into earnings for Thursday for tech? This is a huge week. Amazon. With the election and everything like that, I think that if you've bought it right and you can stay in, staying through earnings is not necessarily a bad idea. But I do think we're going to get a little bit of a pullback down. Look at that! Wow, Amazon's up today. Let's take a look at Amazon. And this is, of course, going into earnings for Amazon. Amazon has earnings in 2 days, and we have relative strength of 90. So that's very strong for the size of stock this is. It's got a very nice pattern with a cup. So it is definitely buyable at this point. I just don't want to buy it until I see what happens after earnings. I just can't buy this until we've come through earnings. But I do think it is going to continue strong. Now, the buy point on this is 33.44. So let's take a look at the old buy point on a flat base. It was 33.44.29. 33.4, and so until it moves above 33.44.29, it is not going to be potentially as stable as it's been. Now, I would buy this because it's such an exceptional stock. Back on a pullback to the 50-day moving average, because it does have a cup and handle and it's starting to move up now. So here's the thing. I do think that Amazon is worth buying. I do. But I want to wait until after earnings. I want to see. That's probably the last impediment that it has. Now, Amazon will pop if a stimulus package is put into it. If a stimulus package passes, you're going to see Amazon pop. So, but I don't want to be in until after earnings, because things can change, and I want to be very clear about that. So it is precarious. If you have profits in some of the issues, I would consider, at the very least, considering selling half of your positions prior to earnings, and that way you're going to lock in some of your profits. I'm not saying you have to sell everything, but I think it's a good idea to be a little bit cautious. We could have some blowback we can definitely have some political blowback, and that could drop the markets. So we want not to be putting on new positions right now. We want to be a little bit careful and possibly protecting our gains if we've got them. JMIA, that's come from TikTok. Let me see if I can put that on the screen. That's JMIA. And that is, let's see, that's JAMA Technologies. Let's put that up on the screen. And by the way, if you're looking on TikTok, and I run these charts on YouTube, very easy to get them. All you have to do is go over to youtube.com/Del's Trading Floor, and this is number 161. It's pulled back a little bit. There's been some selling today. We've got earnings coming up here. It's not for 2 weeks, so we've got some time. This is a German-based company that provides internet connectivity in Africa. Very interesting idea, but makes sense to me because there's a lot of demand for internet connectivity in Africa. 6 out of 9 is definitely buyable. That's good. Let's look at the fund ownership. Fund ownership is moving up, and it is 20% owned by funds currently. So this is looking all very good. I do think, though, that we want to be a bit careful. There's really not a buy point at this point, but we do have some very good stuff going on. I just want to kind of point that out. This green line here is moved above this red line. The red line is the 50-day moving average. The green line is the 21-day exponential, and the light pink, and this is the important line, this is the 10-day moving average. I do believe that you can buy this if it pulls back to the 10-day moving average. If I were to buy this, and I'm not necessarily going to buy it, but if I were to buy this, I would want to see this thing pull back to about 1540 before I would buy it. That's where I would buy it, but it looks very good. It looks solid in terms of an investment. I like to see this relative strength in the 98 range. I think that's very, very strong. So this is a good one. JMIA. Put that on your list. JMIA. And I think that we might be seeing more from them. And it's also in a good place right now. So very, very good. Okay, so let's take a look at the next one. What do you recommend? Okay, that's earnings. All right, I took that one before. Buy point on Amazon. The buy point on Amazon, I'll put that out there on the chat. The buy point on Amazon is AMZN buy point is equal to 33.44.29. I know that by heart, because I look at that all the time. I'm just looking always for a place to go in and myself on that as well. So put that out there on the chat, and hopefully everybody can see that. It's a little bit trading right below that right now. Amazon is trading into earnings, which is in 2 days, basically. It's trading at 32.86.33. It's up quite significantly today. $79.29. That is very, very terrific. Of course, it's a quite expensive stock, so that represents not as large a percentage gain but still, it is what it is. It's a good gain, and if you can only afford one or two stocks, one or two shares, that's definitely one that is worth your while. It's Amazon. I definitely, though, would not buy it until it pulls through earnings. But I think if it does then it can move above the 33.44, then I think we have something going on. Now, there is a cup with handle, and there's a new buy point above the 33.44, and that's 34.96. But let's see if it can pull back, and let's see how it does through earnings, and then we might be able to catch it right as it's making its ascent. Because it does look like if there's stimulus, it does look like this one may move actually higher. Now, it's hard to believe based on the cost of it, but it's looking pretty good. Just don't buy it into earnings. Wait for the earnings, see what happens, and then I think there will be a little bit of pullback. When Amazon pulls back after earnings, that is the time to buy it, because I think it will go higher. Based on this chart, I think we're going to see a very good motion for Amazon. It's a great stock, and if you can only buy one or two shares, or maybe three or four, that's one you want to consider, because it is definitely worth your time. But I want to wait on this one until we get through earnings, just because that is probably the way it's going to trade better. All right, so let's see. Buy point on Tesla. Good question. Now, Tesla is the one I am holding, and part of the reason I'm holding Tesla is because we've come through earnings, so we kind of know what the worst case scenario is on Tesla going forward. And I think the worst case scenario is about 415 or so. It's currently trading at 424. It's up $4 very nicely, but as you can see, it's following this 50-day moving average. Let's look at and let's say the criteria has changed. We still have a decent checklist, 7 out of 9, actually a very good checklist. I'd like to see 8 out of 9, but 7 out of 9, I'll take it. The reason they picked up, it was 6 out of 9, but it picked up because of the earnings. We're still a little bit off the high. We're a little bit more than 15%. Typically, you want to buy a stock within 15% of its all-time high. That typically gives you the best opportunity for making money, but it is a little pullback from that. So that's where we can't, it missed on that. But everything else is just looking stellar. We have a very good investment from Fidelity Contra Fund, American Century, and JP Morgan Large Cap. These are all, it's good to see this kind of fund ownership. We're up to 38% fund ownership. When I started buying this back in December, we were far less than that. We were about 20% fund ownership back then. So it's looking very good. Now, I've jammered on, and I haven't given you the buy point on Tesla. The current actual consolidated buy point, the actual real buy point is 502, and we're below that. There is an alternate buy point, and this alternate buy point can be seen on the weekly chart, and that is basically at 466. It's the top of this blue bar here that I'm showing you on the screen. Yeah, there you go. Oh, come on, there we go. Okay, it's about 466 is where that secondary buy point is. We're currently at 424. Do I think it's going to move higher than that? I do, because I think we're coming into they are crushing their numbers. And here's the thing that makes Tesla different than the other car companies out there. Everybody else has to advertise. Tesla doesn't advertise because they have a full book. They are fully sold out, and so they're just delivering. It's the question with them is it's more, can we get enough cars out the door? That's the big thing with Tesla. So I'm pretty confident on Tesla. With Amazon, I think we want to wait until the pullback, and then possibly, and I think there will be a pullback after it comes to earnings in about 2 days. So I think that we can set our calendars. There probably will be some weakness on Amazon on Friday. That would be my guess, and that we probably will see a pullback. If we do, and there's a stimulus bill that may get passed, Amazon could really zoom up. So that might be a very interesting way to play it. Thoughts on buy points for Apple? And of course, Apple is getting close again to a big event for them. Of course, they rolled out their iPhone 12. It's a little bit pricey, and I don't know in this market if it's going to get kind of the uptake, but we have, it's been supported by Verizon and a lot of the other companies. So, never count them out. I mean, they're a powerful company. Now, where's the buy point on this? Well, the actual consolidated buy point is 137.98, but it's at 116.60. Moved up nicely today, $1.56, but it's still on that 50-day line. So let's see if we can get an entry point for we're right below the 50-day. I think it's going to move up to that line, but I don't necessarily think it's going to go any further. The top probably of this little range is probably 125. So I think it might have, as much as a $10 range in here. It does look like people are acquiring it. But again, I don't want to buy this until after earnings. Earnings are in 2 days. Wait until Friday if you're going to buy this at all, and I would buy it then. It's not necessarily set up to buy as well as I would like it to, but I definitely don't think it's time to sell it. It's just the thing here. I don't think it's necessarily time to sell it, but I don't think you want to add any new positions until we come through earnings. Okay, sorry, late to live. How about Apple? I was just going over Apple and the Apple buy points. I think Apple has seen a little bit of a slowdown. It's sort of priced to perfection. When it did before it split 5-for-1, and that was basically back on August 31st is when that happened. When it split for 4-for-1, the price was a little bit over $500. It has not been able to come back to that price since. So I do believe that we may be seeing a little bit of a slowdown in Apple. I don't think that no cause to panic, but I do think that it is pulled back to the 50-day moving average and is currently selling at 116.60. I think the market is just closed. So, but let's look at the checklist. Here's my concern about Apple and buying any new positions in Apple. It doesn't have as much oomph on the checklist as it used to. It only is 5 out of 9. I don't initiate any new positions on a stock if it doesn't have at least 6 out of 9. So that is a strike against it. It's been a terrific performer all off the year, but I think we want to wait for earnings. I think that it's possibly, if you do have profits in Apple, it might be a good time to start reducing your exposure a little bit and selling off some of the Apple. I really believe that because I do think that not that it's going to crash or anything, but I do think that there may be some other better opportunities there you can place your capital. If you like the idea about sports betting, what do you think about Golden Nugget? I like sports betting as a concept because I do think it's very profitable. But the one I'm interested in is not so much LCA Golden Nugget, though that's not bad if you've gone to Vegas. The one I like though is Draftkings, but I also like another one. I think this is the best play of them all, and that is Penn National Gaming. Excuse me. And the chart is not looking, it's not looking great on this one. I wouldn't buy this right now. We're going into earnings, but I do think this one could turn, and it's pulled back to 57. It's down about $2. So probably, we're going to see how it goes into earnings. The problem with the physical operators, the operators like Golden Nugget, Sands, and those kinds of things, is that it's been very difficult for these companies through this pandemic because people just cannot go to Vegas, and that does make a big difference to the stock there. So let's see if let's look at ServiceNow. ServiceNow has been a absolutely great performer, symbol NOW on ServiceNow. It's pulled back a little bit to the 21-day exponential. Let's take a look at that. Yeah, there we go. 93 relative strength. Its earnings in 1 day. I would not recommend buying this thing into earnings. I think it's time possibly to sell this one into earnings. Let's see what happens. And the overall market trend has changed. So I think it's a good time to take profits if you have them to take. And if you don't, okay, stay in the stock. But If you don't, it's time, I think, to take your profits. Okay, we have Grill. Okay. Oh, please say about Intel. Okay, let's look at Intel. Intel has just been assassinated. Um, it's amazing that it's AMD is worth what it is and Intel is worth what it is. INTC, of course, is the symbol for Intel. It's just looking horrible. Bob Swan was on the other day. He's the CEO of Intel, and he's making a lot of excuses. And it's just, oh man, I just think you want to be in this one. It's got a relative strength of 16. You just don't want to be there. We had bad earnings. Look at that. I mean, the earnings were off 23%. This is just not good. A lot of people are going to be getting rid of their positions. This could be a potential short. I can't ever imagine shorting a stock like this, but it just looks like this just isn't cutting the mustard. It's only $45 a share. I mean, goodness gracious, this should be much higher than this. This is an ugly chart, and this trade just it doesn't seem to be working. So I would not recommend buying Intel at all. I just if you've got it, I think you might want to consider reducing your position on this one. I really do. It just doesn't look good. Let's look at BBBY. That's Bed Bath and Beyond. BBBY. And bring that up, Bed Bath & Beyond. Boy, people like staying home, and they like their Bed Bath & Beyond. So, looking pretty good. We had very nice earnings, up 47%. Now, the thing about Bed Bath & Beyond, this is one of the few retailers that probably will survive, unlike JCPenney's and one of the other places I like. This one's looking good. It's off a little bit today, $1.35, but it is continuing to stick onto that 21-day exponential line. Is there a place to buy this? Well, let's look. Let's look back to the daily chart. Yeah, you could buy it off the 10-day. There just isn't really a place to buy this one. They had a blowout earnings, up 47%. Just doing great things there. 98 checklist is excellent. 799 for retail. It's phenomenal, and their online presence is doing really well. The question is, where can you buy this thing? And that is the problem. It doesn't seem to be setting up on a base. It's just moved, just gapped up, and it's just been moving since the beginning of the end of September. So it's just been doing great since then. Where can you buy this? I just don't know where you can buy this one. This is a tough one. I think you probably will have to watch this one, unfortunately. He straight up. Okay, Funko. I'm sorry. I guess I did. I can't. I get a lot of requests here. So let's look at Funko. FUNCO. Is that right? Oh, I'm sorry. And I ignored you, and I didn't mean to. FNKO. FN. Now, a lot of people that trade on Robinhood like this stock. I'm not really that into it. It has pulled above the 200-day, and it seems like it's turning the corner. But would I be in this stock? Probably not. It's only got a relative strength of 40. I just typically don't like to buy any stocks that are less than an 80 because there's just so many other better places to put your money out there in the market. I'm not saying it's necessarily a bad stock, but it's not a great stock, and I only look for great ones. Yeah, this is good. 3 out of 9. This just isn't. I'm sorry about this, but I know that you might have some Funko. If you have it, you might want to consider selling it. This just doesn't meet the criteria on Funko. I mean, it may be fun, but it may not be fun in your portfolio. So that's kind of my take on it. All right, so let's see. Marvel or QCOM. I'm currently in QCOM and not in Marvel, but let's look at them both. MRVL. They're both chip companies. So let's look at Marvell Technology Group. Thank you for that very much, Mr. Sid. Let's see if I can go. There we go. All right, there we go. Let's see it. Yeah, it's pulled back to the 21-day exponential. It's just hugging that. We have the 10-day diving on it. So that is telling me this is probably, it's trying to hold on to this about 41, 42 range, but it's probably going to change direction, go a little bit lower. Let's look at Qualcomm, QCOM. And these are good comparisons because these are both 5G related stocks that this one's a little bit more expensive. And it does seem to have bounced off the 21 day. I believe basically based on this, I am definitely more interested in Qualcomm with a 92 relative strength. Let's look at Marvell once again. MRVL. Let's see if this is only a 90. They're pretty close. I mean, they're really pretty close. I think that Qualcomm is edged it out a little bit. I always like to buy the stronger relative strength stocks, and the reason I do is because what this means, RS, relative strength, is this means how it's performing against the rest of the market. So this is one of the reasons why we don't add to positions typically when the market trend is under pressure, because we're not stacking the odds in our favor. When the market trend is up, we want to be buying these 90 and 92 relative strength stocks or more, because that means that they're outperforming, all but 10% of the market. So we want to be in that top area, and that's where we're going to get our most value for the money, and it's going to push us up the most. Let's look at the checklist for Qualcomm. It's 6 out of 9. It still meets my criteria. There are 45% funds in here, and it's growing. So out of the two, I would have to take Qualcomm over Marvell, but Marvell is a very good stock, so I'm not in no way am I against that. Buy point for Nvidia. Nvidia is the best, by the way. Nvidia is the best performing stock over the last, and I wish I hadn't sold my positions because I was in the stock in February, and when I first started broadcasting, this is one of the first stocks that I went into. It's just it's a beast, and it's a great stock. And where's the buy point for it? Well, let's see if we can find one. Typically, try to look for the weekly chart. That's going to give us an idea of where the buy point is. There is really no there is a cup pattern. There's a cup with handle actually. Wow, that's really okay. The pivot on this, and this is really interesting. I did not realize this. Thank you for bringing this up. Is 573.94. So let me put that out there. That's a pivot. That's a strong pivot. NVDA buy point equals 573.94. All right. Well, that looks real good. Thank you. That's the buy point on Nvidia. Thank you for bringing that up. This is a strong stock, and looking at this weekly chart, I mean, it's true. It does have earnings in 3 weeks, but this is going to be strong into earnings. Now, would I hold it through earnings? Probably not. I would probably sell this one into earnings. But boy, this is a strong stock, and you could definitely make some money on this one. So thank you so much for that question on Nvidia. Really, really like that. What do you think of Caterpillar? Cat. Here's the thing. That's an infrastructure stock, of course. Caterpillar can unfortunately really be hurt by a trade war between the United States and China. Caterpillar exports a lot of its product. I think they make about 60% of their money outside of the United States. So exports are very important to them. Very good company, of course, in Peoria, Illinois. Everybody likes that place. Very nice. It's off $10 today. I just cannot see it. We were off on the earnings. Yeah, relative strength. This one, it's just not. This is not the place to be. Unfortunately, this is going to be pulling back, and it's probably going to be pulling lower. It depends, of course, on if we get any infrastructure spend, but that's going to be into the next year after the election. So I cannot recommend Caterpillar. I'm sorry to do that because I really like the company in general times, but it's just not. It's not where you want to be putting money right now. Just not the place, unfortunately. Thoughts on LSPD? LSPD. Let's look at LSPD. LSPD. And that's going to give us Lightspeed, and that's a Canadian-based company, which has point-of-sale software. So that's just IPO'd. Interesting. Let's take a look. Thank you very much for this. This is interesting. This is new. I haven't seen this before. So let's analyze this chart. Now, typically on an IPO, I like to see at least 3 months of I'd like to see at least 3 months of what they call the IPO base. That does not have it here, but it is starting to form that. This is typically how an IPO will come out of the box. I'm looking at the weekly chart. It will premiere, and then it will pull back a little bit as the strong hands sell it out, and then as it starts to catch on, it'll push up, and then it'll pull back. Now it'll cup typically, and then when that's completed, then it has a potential of really moving up very quickly. Earnings per share at 9 days. I wouldn't be buying this into earnings. It's got a relative strength of 80. That's very good for an IPO. It's 6 out of 9. That's my minimum required. And it has tremendous fund sponsorship at 50%, 183 funds in it. Wow, this is a very good stock. But it's on the New York Stock Exchange, but it is Canadian, so that's even better. You can trade it in probably both exchanges, so that's an excellent thing too. I like some of the Canadian issues that trade on the New York Stock Exchange because it just makes it widens the market for the shares. I really like that. Increases the liquidity. Liking this one very much. I would not buy this right now. This is a watch list. I'm going to put LSPD on a sort of a watch list stock, and that's very good. So I wouldn't buy this right now. It doesn't appear to give you the right place. That's a lot of times true for IPOs. IPOs are a little bit difficult to buy. I typically like to buy them after they've been a little bit seasoned, about 3 months. But I think they can be very good when that comes up. So let's see if I have any more questions from TikTok. What do you think about calls for SWBI? Let me see if they're a good idea. SWBI. In the market like this, in the market trend under pressure, I wouldn't really recommend buying calls. I would recommend possibly selling them, though. Smith & Wesson. All right. Well, Smith & Wesson, of course, they always, when there's fear of people taking away the Second Amendment rights, these kind of companies do very well. There's also one called Outdoor. There's another one called Outdoor Products, I believe, that also is in this gun space. Earnings are coming up, but we're a little bit away. About 96 is the relative strength. Look at this checklist. Wow, it's strong. 7 out of 9, and we have increasing fund ownership. So, wow, I actually, and I'm looking here. Is there a buy point? The last buy point on the consolidation was at $8.40. Wow, that's a good deal. You know what? If this pulls above this is an interesting one. This is a watch list. I want to see this form a base, but this one could be a very good Smith & Wesson brands. This could be a good one. SWBI, and that's for the on watch list there. Would I buy it right at this moment? No, because it's coming into earnings and it doesn't have a actual place to buy it. Unfortunately, there's no base pattern and there's no pullback. So, but it's definitely a watch list. Hopefully, this will form a base, and this will be viable. It's pulled right up to the 50-day moving average. Now, here's why I won't want to buy this one, even though I like this one. If you'll notice, the green line here, that's the 21-day exponential, and the 10-day, that's the pink line here, are below the red line. This red line is the 50-day moving average. Now, the fact that means that it's still underperforming. Now, when these lines move above this red line here, then the momentum is starting to go up. Right now on this, the momentum is down. That's the momentum on this issue currently. Now, will that change? I think that we might have this if it pulls above this line, and it looks like we're pulling up. And we did have, really good earnings. If that thing pulls up, then we could see a change in the direction. This is viable on a change of direction, but it is not. It hasn't changed direction yet. So, still a buy, not a buy point on this one. Okay, so let's see. Let's see if I can answer some questions. Right. Why was Immuno halted for 2 days now? Probably there's some issue with there may be some issue with there may be some regulatory issues. This is typically why a stock is halted halted. Also, if a stock falls and it's on the Nasdaq and it falls below, I believe it is $2. I can't remember exactly, for a period of a quarter or two, then it is delisted. So that might be the issue there. I just don't know. Immuno, I don't know that stock offhand. If you give me a symbol, I could probably take a look for you on that as well. Any thoughts on ZDGE? Let's look at ZDGE. ZDGE. All right, let's look at it. Zad, provider of smartphone-based self-expression applications, enabling consumers to personalize their mobile phones. This is a penny stock. This is a penny stock. Sometimes you can make money in these penny stocks, but it's very difficult. Here's why it's so difficult to make money in a penny stock. It does look like there's buying, though, going on. So, because the volatility is so great, if it just pulls back just a slightly bit, it can pull back more than 7%. Of course, because I am a William O'Neill style trader, I typically do not like to see a loss any more than 7 or 8%. If it falls below that, I will almost always sell, even if it turns around later on. And that's just a rule to protect capital. Now, that said, it looks as if we've pulled up very nicely on this. Interesting company. It's relatively small volume. This is really kind of a penny stock. You know what? Sometimes I do a show on excellent stocks under $10. This is kind of an interesting area to invest in. And I have done well on stocks in this price range, but I just can't recommend this one based on what I'm seeing here. What you might want to consider, there is a penny stock graduate. Let's take a look at it. It's one of my favorites. It's called Blink Charging, BLNK, and let's see how it's doing. BLNK. I should put Bling. It's not Bling. It's Blink. Blink Charging. Well, Blink Charging has moved back down again, so this is not necessarily the place to buy it. If this thing reverses, though, you could potentially make some money, because you can see it kind of bounces around here, but not the thing to do. Penny stocks are hard to trade. There's another one called Retractable Technologies that I like. It's RTG is the symbol. These are the lower price stock. Oh, wait a minute, it didn't bring it up. Well, anyways, I won't bore you with that because it's not in the buy zone anyways. So there you go. All right, so need more questions from TikTok. Was wondering if you take a loss on Workhorse and move into cash. You know what? I always sell when I have more than a 7 or 8% loss. And why do I do that? Well, because I like to protect my capital. Here's a fallacy that you can't think of a stock. You got to think of a stock as inventory. And basically, the way that works is you want to buy the best inventory that people are going to want to buy from you. So it's not something to hold if it loses money, because if it loses money, then it is not working well, and that's definitely the case, unfortunately, with Workhorse. Workhorse it's a tough stock to buy, to be honest with you. It's in an interesting sector, and it is pretty strong. I mean, it's 99 relative strength, but you just don't want to buy them when they have a chart like this. Now, when it turns, that's when you want to be in it. But right now, as you can see, let's take a look at let's take a look. Oops. See if did that work? No. There we go. There we go. Okay. This is the chart, and you can see that little red line that I just drawn. That's why you don't want to buy it. That's the trend. We want to wait until we have a reversal. You see that it was trending very nicely here, and then it reversed. So we want to see where the reverse is going to be. And this is typically what will happen is it will pull below the 21-day moving average like this, and then it will pull up, and then that's the reversal in trend. Right now, the trend is lower. So right now is a good time to sell Workhorse. Just saying that will probably protect some of your profits going forward. Well, I've yammered on and yammered on. If you want to understand a little bit more about the CanSlim way of trading, and this is many of the top traders in the world use this method. It's available, to learn about this on my website. Now, I did not write this book, by the way. It's written by William O'Neill, who's still alive, and he's probably one of the greatest traders ever to live. And I recommend this stock, How to Make Money in Stocks, A Winning System, Good Times or Bad, and also the companion book, How to Make Money in Stocks, Getting Started. And also, if you want to add a little bit extra, The Successful Investor. But these first two are very important. This is the theory, the orange cover. This is the Cliff Notes. That's the blue cover. I recommend these two to get started in that. It's easy to get to my site. All you have to do is go to www.Dallas Trading Floor. So that is where you can find it. Now, also, you can get free action trade alerts, and they're available at www.Dallas Trading Floor. If you are watching me on YouTube, please subscribe, and also like me. That would be great as well. I really appreciate that. Now, till tomorrow, I'll be back on tomorrow at 2:30 Central, hopefully with your questions. Hopefully I'll get to all of them. And I really appreciate you stopping by. Again, I have the action trade alerts, and also I'm on TikTok at JKMALONE. And also, if you're on TikTok and you want to get the free trade alerts, just go to my profile, hit that link, take you directly to the site.